Welcome to our roundup for 1st to the 5th of October, last week. Guys, welcome, and a little bit of a disappointing start to the month for us insofar as we're 2% down. Now, we didn't actually place any trades last week, and there's a number of reasons for that. Of course, we were approaching non-farm payroll, and we tend to stay out of the markets around non-farm payroll, but also because of the way we were allocating funds, new funds that were coming into our account. They were delayed coming in, and we decided to delay the start of the month so that we could accommodate them in the whole month's trading period. So for those two reasons, we didn't actually place any trades on the fund. However, I placed lots of trade on my personal account and actually had a 13.75% profit last week. So a little disappointed that we couldn't incorporate some of that within the fund. Sometimes you have to do what you have to do, especially when big lumps of money are coming in and you've made commitments to your clients. So for that reason we didn't place any trades, but we had two trades hanging over from September that both went to stop loss last week. So not the ideal start of the month for us, but guys, that is trading for you. Sometimes you just have to deal with things as they come. Make a plan, adapt to it without breaking the rules, and make sure that you're in a position to start this week, as we are, back on form, back on top. And I have to say, I'm looking at the markets and I'm thinking this is just where I want it to be. I made 13.75% last week. That is exactly what I expect from this time of year. September, October, November are our most profitable 3 months of the year. Historically speaking, that isn't always going to be the case, but on average we've made really good returns in these periods. So make sure you're all ready to do the same. I'm going to share with you two of my trades from last week. The first one is a US 30, in other words Wall Street, and I took a short position on that and made 3%. Let's have a look at that now. Okay, so welcome to our winning trade of the week, and what I want to share with you is a 15-minute time frame on US 30, which is the Wall Street stock exchange. Top 30 valued companies in the US. And what you'll see here is we're coming off very strong uptrend, and we would normally trade with the trend. Okay, now we didn't trade this within our fund because it didn't meet the criteria, but sometimes, as I say to my traders, you've got to see beyond that, as we did. And we decided, because we'd had a down signal, that we would take a short position here. Now the reason I did that was because it was coming off so strongly and we had a very clearly defined downtrend within that small area. The definition for a downtrend for us is two lower highs and two lower lows within that period. So in other words, it's making lower lows as it moves down, and the highs are also lower, so we're moving down. You can see that here and here. So we got a sell signal here. We had several sell signals, but I specifically liked this one because it was a confirmation of these two, and it was in a perfect position on our MACD at the bottom. It crossed over and it separated nicely. Blue is above red, and that was a trade that we were happy to take. And you can see we went on and we made 3% here, each of these lines representing our trade management. So 0.5%, 1%, 2%, 2.5%, and 3%, and the trade would have automatically closed as it did at that point. So 3% profit on that trade. And the lesson here, I just want to point out, is to see beyond the overall trend sometimes so that you can take those opportunities. Make sure that you've got a defined downtrend, make sure that you're bouncing off these SMAs quite nicely. We've had a retest, we've decided that we're going to take a short position off the back of that. So that's our winning trade for the week. So now to our lesson of the week, and the reason I've included this lesson of the week, and you'll see in a moment, is it's exactly the same profile as our winning trade on US 30. Let's take a look at that now as well. Guys, welcome to our learning trade of the week, and you can see on my chart here, I have a very similar chart. You could almost overlay them to the US 30 that I looked at. This happens to be US oil on a 30-minute time frame, but a very, very, very similar setup. Coming off a strong uptrend, saw a reversal, we got a down trend flag, our downward arrow, and we moved down sharply. We moved back up, and then we decided to take a position off this arrow here, because we were starting to get confirmation. We got a downtrend and we were getting a sell signal. I also like the position of the MACD, blue above red indicating a sell position, and it was also well above the 0 mark, which is something else that we look for and that we like very much. Now, what you'll see here is that we actually got stopped out. Only marginally, like a fraction of a pip is the truth of the matter. So we're going to start analysing whether we need to just add a little bit more fluff. I don't think so, I think we're okay, but that's trading for you, okay? And the buggeration factor, as my father calls it, is that you're more often than not, you're going to be a pip wrong, and it's difficult to just get that right. You'll see that the trade has moved on, it's already made 2%, and could easily go down and make 3%. So in terms of the setup, I stand by our analysis. We could have added a little bit more fluff here to make sure that we didn't get stopped out. So 2 lessons from this. One is, make sure you've got enough headroom in the trade. We have a very set criteria that we keep under analysis, and we transform that ever so slightly as we trade on a monthly basis. At the end of the month, we do our analysis of what went wrong, what could we learn, and maybe we'll add a bit of fluff. So that's one of those situations that will come under analysis at the end of the month. The second lesson, it's exactly the same setup, but it's a losing trade. And the lesson for me here is the psychology of trading. And it is that, just another losing trade. Bearing in mind we made 3% on the US 30, we've only lost 1% here. So if you're following your rules, if you're following the strict trade management over those 2 trades, we're still 2% up. And that is the process of trading. Moving on from a loss, just accepting it for what it is, and then moving on looking for the next opportunity, the next 3% trade. So thanks for watching. I hope you take something away from the psychology of that learning trade. Fantastic. I hope you take something away from the analysis of those charts, guys. So now over to a high impact economic data for the week, and there's only 3. It's a very quiet week in terms of high impact red flag news from forexfactory.com. The times to look out for are October the 10th at 09:30 GMT, where there's GBP news out, and also same day 1:30. Next date is October the 11th, 1:30. Again, GMT, all the times I'm giving you are Greenwich Mean Time, so UK time, and the news then at 1:30 USD news. So I've mentioned the pair specifically because anything related to that currency is going to be affected by the news. So GBP USD, GBP JPY, Japanese yen. Maybe you're trading Euro GBP, so you need to be aware that all those currency pairs that contain a GBP are going to be affected potentially by that red flag news. So 3 slots to look out for this week. The overriding principle, of course, of Brexit continues, and we are moving more and more closer to the deadline, so be cautious still around GBP and Euro currencies over the next week. Guys, thanks for watching. I hope you found this useful. If you have, make sure you put your insights and comments at the bottom. I'd love to get some feedback from you. Feedback is the breakfast of champions, and we want to serve you and add value. So if you can tell us what you want, we'll make sure you get it. Make sure you like and subscribe to our YouTube channel and give us a thumbs up on Instagram and Facebook.